Is your business protected against the threat of malicious litigation and frivolous lawsuits? Are you sinking company profits into marketing campaigns that do nothing to contribute to the growth of your business? Bottled Business Sense provides practical business perspectives that uniquely emphasize both legal and media marketing strategies to protect and ensure the longevity of your business. Now, whether you're trying to provide a startup business with some level of stability or an established business with foolproof asset and estate protection, or simply attempting to get a better return for your business marketing dollars, Bill Bernard and Rick Moscoso will expose potential pitfalls to ensure the security and growth of your business, free from unwanted expense and the threat of litigation. You'll learn how to implement marketing and protection tools equal to those used by today's most successful corporations. Let's join Bill and Rick for today's Bottled Business Sense show.
Well, good morning, everyone. Today is Tuesday here at 10 a.m. on the Bottled Business Sense show. Welcome back. Today is a continuation of last week's episode. If you haven't seen it yet, then go back to bottledbusinesssenseshow.com and take a look at our entity formality. What is the registered agent and annual meeting minutes? That topic of discussion. Today, Bill's going to continue that a little bit more with important differences between S Corp and LLC selection. So before we get into that, I'm going to bring Bill onto the show and welcome him. And good to see you again, Bill.
Hey, thanks, Rick. Appreciate it. I'm happy we're back. And before we get started real quick, can we give a quick shout out to everybody as to where we can be found? I mean, I know we're on Facebook, LinkedIn, we're all over the place, right?
Oh yeah, absolutely. Yeah. Just take a look at our social media or just search for Bottled Business Sense Show on Facebook, Twitter, LinkedIn, on our website, bottledbusinesssenseshow.com. And you'll find us there. There's a whole host of episodes that we've done over the last 5 years, both in legal and marketing topics, video marketing topics. Bill is a wealth of information when it comes to the legal aspects of business law, employment law, business entities, that sort of thing. So really looking forward to learning a little bit more about the topic today as we continue from last 2 weeks ago. So
good. Well, I want to make a little announcement before we start. This is important stuff. There are a lot of publications and a lot of discussions out there about why somebody wants to choose an LLC or an S corporation. What would be the reasons for doing so? And there are some basic differences. Generally, an LLC may be a little less expensive. Generally, an LLC, you don't have to, even though I propose you do. You don't have to have these formalized minutes entered into books. With an LLC, you can divide income a little bit differently than you can with an S corporation. But we never really talk about some of the numbers that are associated with selecting an LLC or an S corporation. And by numbers, I mean tax issues. And boy, oh boy, the reason for that is because I'm not a tax guy, and I've refrained for all of the episodes in the past about talking specifically about taxes. But with some of the things that have happened recently, and with the fact that some LLCs have very pronounced advantages that are not that difficult to comprehend, I thought I would, in fact, take a shot and give you a little bit of an explanation about when you would want to prefer an S corporation over an LLC, more specifically, and indicating as well that follow up with your tax accountant for any questions you may have as a result of watching this show or any questions you may have in general. Consult a tax expert, whether that's a tax attorney or a tax CPA, whoever you deal with. It's so important to have a tax person on board along with a marketing person and a business attorney, and we've discussed that many times in the past. So the first thing I want to reference, Rick, is when you have an LLC taxed as an S corporation, that is the same thing as having a standard S corporation. You can after you have an LLC, you can convert the LLC to a taxable entity by way of filling out a special form and saying, I want to be taxed as an S corporation. Why did I just say that? Because this show not only deals with people who want to select a business entity starting off with an entity, but someone may have an LLC and want to convert to an S corporation. And you can do that, and it's not very expensive, and you can do that on the Secretary of State website if you really want to, if you feel competent in doing it. So let's talk a little bit about the benefits of an S corporation, whether you choose it to begin with or whether you convert your LLC to an S corporation. We have what is called, and I'm going to read a little bit of this. These are all my notes, but I nevertheless may refer to it a little bit more because I want to be very specific about this tax stuff. We have what's called a self-employment tax. It's referred to as capital S, capital E, and it involves your FICA, your Medicare, your Social Security. All of those taxes are your self-employment tax. And it comprises about 15.3% of your bottom line. Okay, so it's a substantial amount. An LLC is taxed as a sole proprietor, the same as a sole proprietor if you don't opt to have it taxed as an S corporation, meaning that your SE or your self-employment tax is applied to every dollar of net self-employment income. So every dollar you make, whether you take it out as a salary that year or not, is going to be taxed by way of your self-employment tax. For a lot of small business owners, this FICA tax can dwarf even the federal income tax you pay. It could be higher than the federal income tax. And I remember writing checks for my self-employment tax that were quite large as well. So in an S corporation, here's what you need to remember. In an S corporation, the net income is split into the salary portion and the pass-through net income portion. Follow me closely here. The salary portion and the pass-through net income portion. So all income earned in an S corporation does not pay corporate tax, and any income is taxable to the individual owners in the year earned and is subject to ordinary taxable rates. Okay? However, in an S corporation, the SE, the self-employment tax, is only applied to salary and not on the net income. This means that for every $1,000 you classify as pass-through income, you save $150 in taxes. See if you can follow me here. Let's say your self-employment tax, which is going to be 15.3% of your bottom line, that is going to be based on the income you take. So, as an S corporation, I take a salary. Let's say I make $100,000 last year. But let's say I only take out $50,000 in salary. My self-employment tax is only going to be based on that $50,000 in salary, not on the $100,000 of profit that I made. And it may not be $100,000 in profit, but whatever the total bottom line profit might be. Let's say it was $100,000 in profit. My self-employment tax isn't going to be based on that. It's only going to be based on the $50,000 that I took out as a salary, because the remaining $50,000 is pass-through income that goes on my federal tax return, and it'll be taxed there. It won't be taxed as a self-employment tax. So my FICA, my Medicare, my Social Security is going to be taxed on the $50,000 I took out on salary, not on the other $50,000 that I left in my corporation. Right? So that's why this is very important, and this is what benefit you get as an S corporation. So estimates, here's something else that's important. Recent estimates have shown that S corporations are 15 times, listen to this now, 15 times less likely to get audited than an LLC or a sole proprietor, even though they save more on taxes. So why not classify all of the income as dividends and take no salary then? Why not beat the whole system and say, hey, I'm taking no salary. These are dividends. So therefore, they're not subject to self-employment taxes, because the IRS will come after you. Why? Because they know this, and they will require S corporation owners to take a salary. You must take a salary. And if you're making $100,000 a year and you're only taking $5,000 in salary, you think that's not a red flag for an audit? You better be taking a reasonable salary. You still save money, but you got to play fair. So there's 5 factors that I've come up with that make you a candidate for an S corporation. Okay? And again, we're concentrating on this self-employment tax. First, your income is often referred to as ordinary income, and it's derived from services or the sale of a product. It is not W-2 income. Anyone getting a 1099 miscellaneous for self-employment income, okay, should be wary of being an S Corp. They should be an S Corp, not wary of being it, but should be wary of the idea of not being an S Corp, I should say. Now remember, passive income is not subject to the self-employment tax. What I mean by that, passive income is rental income from rental property, interest, dividends, capital gains, not subject to FICA, Medicare, Social Security. Only your active income. Number 2, if you are somebody who is required to be licensed in your profession, brokers, realtors, insurance agents, doctors, lawyers, contractors, all need to check with their local licensing boards in whatever state they're in to ensure that they can operate as an S Corp. Usually the answer is yes. Okay? And you'll want to assess that, importantly enough, because it's one of the advantages you may have. Number 3, a business owner doesn't need or want to incur the cost of an S Corp unless the tax savings exceed the cost. If your business is making net ordinary income subject to self-employment tax of $40K or more, generally that's the standard, the measuring point. If you're making $40K or more in net ordinary income that's subject to employment tax, because you're taking it out, right, and you're using it as salary, you're probably a candidate for an S corporation. Number 4, there's what's called a 199A deduction, which is the product of the Tax Cuts and Jobs Act, which gives small businesses an automatic 20% deduction on all pass-through income. And the bottom line is this is a deduction that is not inhibited by the S corporation, but actually enhanced with the strategy of an S corporation. Why? Because if you have pass-through income from a S corporation and you can combine that 20% deduction to that pass-through income along with the advantages you get from the self-employment tax that we just spoke about, you combine those two and an S corporation is sounding pretty good at that point. And finally, number 5, setup costs. An S corporation can range anywhere between, I would say, $500 to $2,500, depending on how many shareholders you have and what the complexity of your operating agreement is. You have maintenance and quarterly annual tax filings. So even if you don't have other employees, you can pay your payroll tax quarterly with the IRS. This breaks down the amount that you have to pay, and you may end up with a refund at the end of the year if you're disciplined enough to make these payments quarterly, like I always do. So with an S Corp, remember you're paying. And so that allows you to control your self-employment tax while paying your income tax on the pass-through income portion of it by making quarterly payments. You combine that with a 20% deduction overall, the fact that you only pay self-employment tax on the 50% or whatever percentage you take out as salary, and the fact at the end of the year that you're now going to have annual costs that are very minimal, why not combine an S corporation with the asset protection that it normally provides, the corporate credit that it would provide, because working as a corporation is always very, very valuable when you're dealing with other business entities, and the common sense that it makes to do all of these things together. So you've got this S corporation working as in your favor, both from a tax standpoint and as the corporate shield that you need to avoid any potential litigation against your personal assets. And of course, that in some part depends on what we discussed last week, making sure you have your annual meeting minutes upkept on a regular basis. The last thing I want to cover real quick, Rick, is if you are a LLC and you want to upgrade, or not upgrade, but you want to change to an S corporation, here are the requirements you must be aware of. You must have your entity is a domestic entity here in the United States. You must be willing to understand that your company can have only 100 or fewer shareholders in California. That's the rule for an S corporation. Your shareholders cannot be non-resident alien shareholders. They cannot be partnerships, or they cannot be corporations. They must be individuals. And your corporation, if you decide to issue stock, may only have one class of stock. You're not allowed to have voting and non-voting shares of stock. You have to have one class and one class only. So hopefully this has been a little bit effective in giving you guys some of the details you need to make this decision. I also want to mention that any existing LLC or corporation with a tax year that began on January 1st and that wants to be taxed as an S corporation for 2019 must submit a tax form called 2553 no later than March 15th, 2019. So generally, this form has to be arrive within 60 days. It must be accepted by the IRS and will arrive within 60 days of filing Form 2553. No, excuse me, let me repeat that. Notification of acceptance from the IRS will arrive 60 days within filing the 2553. And if you need to ask for an extension, do so, because March 15th is around the corner. So again, you can do this as an individual who wants to form an S Corp. You can do this as a LLC who wants to switch over to an S Corp. But this stuff, I think, is worth mentioning for the reasons stated, Rick. And I hope people were ready to absorb this and could absorb this. But again, that's why I say refer to your tax guy for follow-up questions if you really, really need to.
Yeah, absolutely. Two things that I learned from this is number one, consult with your business attorney if you are considering these changes. And number two, have a good tax accountant to help you along the way, working in conjunction with your business attorney. So,
no, absolutely. Because let me tell you, I remember vividly writing checks for my self-employment tax, and while at times they may have been healthy, they were based on the money I took out as salary and not the total money that I had in my company. And that's a big plus, because that's not the way it works with an LLC unless you file a form and choose to be taxed as an S corporation. But my research has led me to believe that S corporations are really, really friendly and really important. And I like them better than LLCs. I don't mind the formalities. I'm a lawyer. I'm used to doing those things. But also, when it comes to people who have professional licenses like myself, then it's almost a requirement, because many states don't allow you to have companies that are called limited liability companies, especially if you're an attorney or you're somebody who is trying to avoid liability. So you need to check your state's requirements before you file that LLC if you do have a professional license. Please remember that too.
Yeah, great. Well, thanks a lot, Bill, for the information. This was a great episode today in continuation to a couple of weeks ago. If you do have questions, please reach out to Bill. His information is below this video here, and he will actually answer the phone and take up your discussion. So please do that if you have any questions. And again, we're on Facebook, Twitter, LinkedIn. Our video blog or website is bottledbusinesssenseshow.com. And you can review this episode as well as 2 weeks ago and see a whole host of videos we've done over the last 5 years. So
yes,
thanks
really.
again, Bill.
No problem. And folks, I know this was a little bit lengthier than it normally is, but that just goes to show you if you need to follow up with questions with your tax person, please do it, because it can get a little complicated if you're not used to doing this on a daily basis. Okay, have a great, profitable week. Thanks, Rick, for your input on the other side, and we'll see you again next week.
All right. See you again, bud.
Okay, bye-bye now.